What's up, everybody? Welcome to another edition of PoCommunity. On this episode, we welcome Devin Sharma from Bespoke Lending Solutions. We talk about the housing market here in the Lower Mainland, as well as the challenges it's been being a mortgage broker in these crazy, challenging times. Check it out. Devin, how's it going today?
It's going well, Mike. How are you?
Very good. Thank you for coming on the show. I think you just became a virtual office member. No, what is it? No,
VIP member. Yeah,
VIP member. So, I'm glad that we got you on. Tell me a little bit about yourself and tell me a little bit about Bespoke Lending Solutions.
Yeah, for sure. First of all, thank you for having me on the show. Love what you do. Watched a number of these episodes, and it's really neat to see what you're doing with this and promoting different organizations in Port Coquitlam. So that's fantastic. So I'm a mortgage broker with Bespoke Lending Solutions. We have over 60 lenders that we work with, and we help individuals either with their residential, rental properties, commercial properties, construction, alternative lending. So individuals who don't necessarily qualify for traditional financing, we have access to alternative solutions, refinances, and private lending as well.
That's obviously right now is a very interesting time in that industry with rates. As we're recording right now, rates went up today. Don't want to stay on the negative side of things, but it's got to be a tough industry to be in right now.
For sure. And I mean, it's important to note that 3 years ago, in 2020, when we were looking at rates, right now we're seeing the overnight rate at 5% as of this morning. 3 years ago, individuals were qualifying at what's called the stress test rate, and that was 5.25%. So even though you had a interest rate or a given rate of 2% or 2.5% on your mortgage, you qualified at a much higher interest rate. Now, that qualification rate has gone up a bit now because it's 2% over the given rate or 5.25%. But individuals are still able to make their payments because they qualified at a much higher rate. Having said that, definitely those on a variable rate are starting to feel those pressures. And with this latest interest rate hike, individuals do see somewhere between $100 to $300 additional per month on their mortgages that they're paying. But what goes up must come down. And at some point in time, we are going to see some changes in this.
Yeah, so it's already we know how Vancouver is for prices. Adding all these extra fees can be quite a burden on a lot of families, especially those people that were on variables because government and stuff have promised in the past, these rates are going to stay low. So instead of locking in at that solidified rate, you're getting that variable, and that's a risk you take, essentially, right?
And that's exactly it. I mean, we have to understand that we're not seeing rates like we did in the 80s where interest rates were 18, 20, 24% that individuals were qualifying for mortgages for. We're still at relatively low rates below 7%. I use that figure relatively low, comparing ourselves to our neighbors to the south that are looking at rates at 7 to 9% on qualification as well. So as a healthy economy, a 5 going down to a 4% interest rate is a good number for us to be looking at.
How have the strategies changed for people that you're working with, for, let's say, first-time home buyers? How has it changed for you and for them to try to get into this market?
For sure, and for first-time home buyers, I mean, there were a number of incentives prior, and a number of those incentives went away with the pandemic. I mean, we still have to realize we are still coming out of a pandemic, and we're still only seeing the tip of the iceberg of things that the pandemic sort of held up against the economy. And so for first-time home buyers, we're looking at qualification in a couple of different ways. One, the most important thing comes down to, well, I shouldn't say the most important thing. A number of important things come down to, one, the down payment, the source of the funds coming in for a down payment, whether those are gifted funds or they're funds moving from another country, from overseas, if individuals are buying in Canada when they've previously lived abroad, is sourcing those funds, making sure there's a paper trail for those funds, and then qualifying at a much higher interest rate than you previously were, but you also get to take advantage of things like lower fees on property transfer tax. You also get to look at buying places where you get some incentives like using a first-time homebuyers plan through RSP deposits and other sources of down payment income. And at the same time, one of the things that we're advising is having a strong cosigner, because household income is the largest aspect to how much you can qualify for a mortgage. So everything has to be in sound balance. A credit score is important. Having a credit score over 650 is important to qualify for prime lending rates, and often those numbers go up to 680 and above for a credit score. Now, household income with no other debt. So if you were to look at, as a first-time home buyer, a property that costs $500,000, you're buying a condo in Langley, $500,000. They're still available out there. And you have your down payment of 10%, so that's $50,000. So you're looking at a mortgage of $450,000. You'd roughly need a household income of $120,000 with no other debt. So no car payments, no loan payments, no outstanding credit cards, no personal loans to qualify for that mortgage. Now, in this day and age where there's groceries, you need a car to get around, everything else, every $400 a month in car payments takes away $100,000 at minimum of qualification dollars for a mortgage. So all of a sudden, for that same property, if you have a household income of $120,000, but you have a $400 a month car payment, you only qualify for $350,000 instead of $450,000. So especially for first-time homebuyers, talking to a mortgage broker and getting the education around how different payments going out change what you qualify for, and starting the process early so that if there are any flags that we can help you get through prior to doing a full mortgage application makes a ton of sense.
Yeah, that totally does make a lot of sense. I know in the past, like, investment properties were, like, especially in Vancouver, a huge thing. But now, are you seeing like a huge drop off, considering if you're going to invest in properties to rent out? Rent has to be so high because your rate is so high, and you have to pay your mortgage and still make something on top of that. So have you seen that, like, a lot of less people?
Yeah, surprisingly, we actually haven't seen a decline in the rental property market. Definitely do have individuals that I've been talking to, and I know other colleagues of mine that I've talked to who have rental properties, who have talked to us about the differences between holding a variable rate mortgage on their rental properties or a fixed rate mortgage, and partnering with tax accountants to talk about how writing off the interest rate works for your investment properties. I don't advise on taxes, but there are implications there are incentives to a interest rate and writing that off on your investment properties. But yeah, surprisingly, we haven't actually seen a decrease in individuals looking at investment properties. Biggest thing with investment properties in the mortgage world is they do require a higher down payment off the start. So there's no 5%, 10%, 15% down payments on investment properties. But yeah, it's great to see that we still have individuals getting those recreational investment properties, either for renting out or for their own personal use.
Yeah, there's a lot of information online. Obviously, we know some is real, some is fake. A lot of tactics used on both sides of the political spectrum when it comes to talking about what's going on in the housing market. You see a lot of stuff out there on different social media platforms with how much, like, the average person has to make to buy a place in Vancouver, and then you hear about, like, the Conservative government or the Conservative Party talking about how, like, 90-year mortgages are a thing now. Is that the truth?
There is no 90-year mortgage currently, but there have been talks, and at the end of the day, not being a chief economist or anything else, we can only go off what we hear as well and what we look at. But there's a number of experts that I speak to and I follow that look at the benefits of having a 40-year amortization or a 50-year amortization on a mortgage. Now, the interesting piece is individuals hear variable rate mortgage and think that's one thing, but there's actually a couple of different types of variable rate mortgages. And so talking about amortization is really interesting, because unless you have an adjustable rate variable mortgage, which means as the interest rates go up, your payments go up, what you have is a variable rate mortgage. And what happens with a variable rate mortgage is as the interest rate goes up, you pay less towards the principal of your property and more towards the interest. And over time, as a number of individuals right now are experiencing, their amortizations have gone up past the 40-year mark, where I have a client that I've been dealing with recently, who was down to 18 years remaining on their mortgage. They now have a 43-year amortization based on the fact that they were on a variable rate mortgage. Now that will change, and they've changed their payment structures and things like that. But the truth is, everybody has an opinion. A lot of people go online and share things on social media. I do as well. I have an opinion as well. But the best thing to do, because every single mortgage is so unique, it's like a fingerprint, really. It's so unique to the situation that anybody is in. It's really important to talk to a professional and go through your file with you and look at exactly what's going on. Look at your personal situation, your household situation, and see how things like an extension in amortization or a lock-in versus a variable rate mortgage may change your current situation.
Yeah, it's so important. It's like just how mortgage brokers and brokerages deal with people and what they offer to people are different. Like they're different. You have to. It's obviously I want people going to you or interviewing,
and I appreciate that.
But it's just like everybody's gonna have things that they do and that are gonna benefit you. So it's like. All this information coming out to you online could be true in some aspect, but if somebody else who specializes in some other area, you find out and they specialize in something that you need help with.
So let's take yourself, for example. You've got your primary residence. You could have an investment property. Then you've got a business that you operate. And you could be looking at commercial storage unit. That's 4 different areas to be dealt with. And where I may specialize in residential or commercial properties, I partner with others who specialize in other areas like investment properties or your rental market or anything like that. And so getting in touch with a mortgage broker doesn't mean that hopefully they're not doing everything to just hold your business and saying they can do it, but really offering you that professional, honest advice saying, I can't do this, but I know someone who can.
Yeah. So I'm going to go back a little bit. How did you get involved in this industry?
Yeah, that's actually a really neat story. So over the last 4 years, I was working with the First Nations community. And while working with them, I came to know about how they were mortgaging their properties on reserve. And there were some things that didn't make sense to me, and I really wanted a better understanding of how the mortgage world worked in BC specifically, and more specifically on First Nations reserve lands. And so that's what kind of spurred me to take the course to begin with. And then I have a number of individuals that are in my very close friend circle who are realtors as well, and I spoke with them. And they guided me and said, hey, we think you'd be really good at something like this. You're very analytical. You like to talk to people. You like to meet people. You like to work through complex situations. And so do it. And so everything was sort of pointing towards the direction of, hey, let's do this. Let's get into it. And maybe we can help some people along the way with complex financing situations for their homes to make things easier for them.
So when did you decide to do that?
I was actually in summer of last year.
Nice. So obviously it's a big step doing anything in those times as well. Anything kind of like push you in that direction? Was it like finally like following a passion, or was it more just a necessity as well?
Yeah, I would say it was more passion than necessity. Yeah. Like some others who have entered the field, I was fortunate to be working in a nice corporate position, had what I would say a decent salary, and wanted a greater challenge, and really wanted to help individuals with something as complex as financing for their homes. And so it was kind of one of those passion-driven purpose moments of, hey, we're going to do this.
Yeah, that's like, obviously it's been a crazy few years, just even seeing how property like has just done this in a matter of 3 years. People purchasing like crazy. What was it, 2021?
2021.
Yeah. A lot of people. We were meeting in our space here, moving out from Vancouver to the Tri-Cities or to the Valley because they could sell their condo in downtown Vancouver for this ridiculous, and then buy a townhouse or a home out here for like basically a trade-off. So like, you've seen a lot in the last few years.
I had people knocking on my door at our townhouse, making us offers, no subjects, just people. Not even with representation.
Yeah,
it's been such a crazy market.
We sold our house in Maple Ridge during the pandemic, and it was insane how like, it's like you don't want to wait too long, you don't want to take too low of an offer because you're talking hundreds of thousands of dollars differences. Seeing like a couple months after you sell can hurt because you see like, holy, they're selling for this much now, and then now they're below what we sold at. So it's like it's changed so drastically.
It has.
It seems like it's definitely a market, that the flourishing market. It's still houses are selling, but it's a lot of the people that have the money like to buy outright.
Yeah, and that's exactly what we're seeing. Is we're seeing a lot of individuals who are selling family properties, single family homes in Vancouver or the West End, or homes that have been in families for generations, and then they're buying places cash, no mortgage, and being mortgage free themselves, while they're selling a home for 2.5 million, 3 million, and buying a new place for 1.2, 1.3.
Yeah.
So they're putting cash in the bank as well, or buying investment properties, and so that's the other place that we see a lot of investment properties being sold from.
Yeah, it's always kind of happened. In the Lower Mainland's just grown tremendously in the last, 50 years, I'd say. My parents moved to Coquitlam from Vancouver, and when they moved there, I think it was in the 80s, all their friends were like, you're moving out to the boonies.
Yeah, where are you going?
How are you going that far out? And now it just seems like everybody's going to end up coming out here. And it's not like it's drastically cheaper like it was back in the day.
No, yeah, it's no longer attainable for some.
Yeah, no, it's definitely not. Even places that used to be traditionally inexpensive, going out into the Valley, Maple Ridge, Mission. Like, even Mission is on par with Maple Ridge for pricing right now.
And you look at luxury, or what's quantified as luxury properties now. You look into Maple Ridge, you look into Pitt Meadows, you look into Mission, Chilliwack. Yeah. There are luxury properties on sale in all of these, what would have been, 10, 15 years ago, rural markets.
Yeah, I know they were rural markets. We moved out to Maple Ridge in, I think it was 2014, 2015, something like that. All the way up like Albion area, and there was nothing
Which is
there.
Just a beautiful area.
It is. It's pretty much, there is some housing that was built about 10 years ago, but for the most part, it was a bunch of brand new townhomes, everything. And when we moved in, it was the only townhouse out in the townhouse complex out in that area. And now there's like, I think 10 just along 240th Street there alone. And the growth is dramatic, but you're talking people that bought not even 10 years ago, doubling and tripling on what they bought it for.
Of course. Yep.
It's insane. It's a crazy market. It's one of those things though, as people that own property, and you own it yourself, and it's great when you're a homeowner and the prices go up. But where do you go when you sell? And that's the big question.
And that is the big question. Individuals riding that wave of 2021 into early 2022 was exactly it. Of, okay, so we're going to sell our properties at these inflated values at that time, because you had offers and properties closing in 2, 3, even 1 business day in late 2021, early 2022, who sold their properties and then bought in that same market where it was still very hot and prices were very high, who on a 1-year or a 2-year fixed mortgage are now coming out of that, and realizing that their property values are less than what they paid for them, and it's a very difficult market to be in there. Sorry, I know we got back to the negative there.
Oh, but
Yeah.
it's hard not to talk about because
Yeah.
nobody buys property to lose.
No.
It's like that's the one major rule in buying properties is always like the smartest investing you can do because you're always going to make money on it. And when people start losing money on it, it gets scary. And that's why you got to feel for the people that are trying to buy that. So the prices are too high for them to buy. But you also got to feel for the people that either maybe they had the money to do it, but there's also people that like took all of their savings, everything to buy. They needed to. It was a necessity, and then boom, 2 years after they buy, they're losing on it.
They had to requalify for a mortgage. They're not able to, and they've had to sell at a loss and restart.
Yeah, and it's just not something, especially in Vancouver, Lower Mainland. Just even the valley, you'd never heard about it before. But like literally, I've seen it firsthand from being someone who sold during the pandemic. How people literally are losing now. It's townhouses you're talking about, townhouses in the Tri-Cities and in the Valley selling for almost $1 million. That's
You've actually got townhouses in Coquitlam selling for 1.5, 1.6, 1.7.
Yeah, the newer ones.
Yeah.
Like when you have newer builds, it's not out of the realm at all.
Yeah.
And it's just scary for families because it seems like, you know, if you have kids, you want to be around your kids. The salaries that they're saying you need to make to pay this much, it's not very easy to come across those salaries. You're talking people that go to university 8 years, whatever. They're not making that coming out of university.
No, and even still, you look at what salaries are in BC compared to even Washington State for similar positions, and we have a lot of work to do on salaries, on diversity, and on the wage compression pieces of things.
Yeah, 100% we do. If it's going to cost us much, you kind of have to. You can't have a majority of the population living below the poverty line.
No,
you can't eliminate middle class. That's what it seems like.
No, and it seems like that's what they're trying to go towards, is that elimination of middle class. But I don't think that will ever work.
No, I think usually the middle class can be very outspoken if they get pushed too much. And I think it's finally getting to that point where it's the ridiculousness of just the cost of everything. It's ridiculous, and it needs to get back to a place where families are buying those first homes for themselves, and you don't want to lose all the young people to Alberta just because they can't afford it here.
and that's exactly it. You know, the West Coast tax that we hear about all the time. We do pay a premium to live in BC, but we are starting to see a lot of individuals moving into other provinces, and that's a direct correlation to the way costs are currently.
Yeah. Have you thought about moving your services to other provinces, or have you already?
And we have. So I do work a bit in Alberta, but you know, my wife and I have looked at the potential of moving to a different province, or supporting individuals in other provinces, and family keeps us here. But the cost of living is definitely starting to get challenging.
Yeah, it's just. It's uncertainty. It's people have been living on the edge of uncertainty. Doesn't matter what class of money you're making. Everybody's been stressed out because if you're a business owner and you're making a ton of money, but then the pandemic hits and you're still having to pay salaries and pay this, well, the money's not coming in. The more people, usually the more money you have and the bigger your business is, the more people you got to pay and are under your, and you don't want to be that guy laying everybody off.
And in the same breath with the pandemic, and there were a number of resources that came for businesses, but if you were working full time and had a side hustle, and we know a lot of individuals who are doing side hustles to make ends meet or to help build towards down payments for their homes or going into a bigger home or anything like that. If you had an income, you weren't necessarily qualifying for the business programs that were coming out for CERB or other things like that, because you had a standard income. And so even though you could have been earning more on your side hustle, you didn't qualify for some of those business programs that were coming out during the pandemic. So some of these smaller businesses or side hustles actually took a significant hit during the pandemic.
Yeah. I mean, don't get me started on paying it back. With the promised interest rates being lower, and then all of a sudden the rates are higher, and you got businesses that have to pay it back during a time they're just trying to get their feet back. They're just trying to build their company back up, and you're having this huge loan that the government gave you to. It's hard to not be negative about it, but it's like, I think over in time, people will survive and excel again.
No, the best learnings come through hardships, right?
Yeah.
And right now, where a lot of individuals are going through an experience for the first time in their lives in regards to payments or interest rates the way they are, or the cost of goods the way they are, and we're learning how to adapt, and we're learning new skills, and we're looking at things in a different light, and understanding that, okay, it's tough, but this isn't the end of the world. We can make it through this. We're coming up with new ways to tackle those hurdles, and that's fantastic.
Yeah, and I mean, you're getting into it at, like, the last few years, a very difficult time, and it's challenging, and it's making your brain work at a million miles per hour. But once everything calms down and everything, after getting through all this, and you have that time to breathe, how much stuff will be easier, and just you've gotten through the hardships of this just crazy period of time. I've talked to a lot of real estate agents, and it's just like the same thing. A lot of them are just starting out the last few years, and exactly what they say is like, it's the hardest time to be a real estate agent. If you can somehow make it succeed in this time, you're going to kill it in a few years.
And that's exactly it for mortgage brokers coming into the industry right now, like myself. It's tough. It definitely is tough, because we are seeing a decrease in volume, a decrease in sales, and everything like that. But if you can take the learnings and the nuggets from this period of time, and as things start to evolve and adapt and change, you are going to be so much further ahead.
Yeah, 100%. 100%. A lot of, I mean, we're co-working space here, so that's what we're dealing with, these small businesses that have had to jump through hoops and figure out, like, think outside the box on how to keep their businesses flourishing in these crazy times. And yeah, whether it be like we have startups here, or we've had people from bigger companies and stuff have to take a step back and be in shared spaces, just because, like, things cost a lot of money for those big companies. Like, I've brought it up before. So it's just really, with what we have here, the community coming together. Everybody's gone through this stuff together. And they have. Nobody. Yeah. There's some industries that really succeeded somehow, like really succeeded during these times. But there's a lot of people that are going through just stuff you'd never even think about. Like, it's challenging. It's challenging times. I do appreciate what you're doing, though, because you're probably dealing with a lot of people that are, it's both positive reasons and negative reasons.
And it is, yeah. Individuals coming in, not going into their first home, so looking at refinances or things like that to help make ends meet. There's definitely some very touching stories and scenarios that we deal with on a regular basis. But individuals come to you with a need, and if you can help alleviate some of the pressures that they're facing and help them get the financing, funding, equity that they need, there's definitely some really good stories coming out of that.
Well, that's amazing, man. Definitely want people, if they're looking to purchase or deal with anything mortgage wise, I want them to come to you. So where can we find you, and where can we find your business?
Yeah, so you can find me online at devinsharma.ca. Did I share my phone number?
If you want, yeah. People have in the past. It's
perfect. I mean, text, phone, email. So text or phone at 778-939-8170, or email at devin@devinsharma.ca, and I welcome any conversation.
Awesome. And any social medias that you want me to share, I think I have your information. I'll put it in our social media description.
And shameless plug, thank you for putting my plaque first on the wall.
No, yeah, it's pretty nice, right?
Yeah.
Yeah, no, it's definitely a cool thing we got going on there. We're glad to have you. Thank you for your support with us, too. It's always great to have new members that support our community, support what we're doing, and we love supporting our members. So,
excellent.
I appreciate it, Devin, and thank you for being on the show today.
Thank you for having me.
And thank you all for listening or watching the show today. It was a great podcast with Devin Sharma. Be sure to subscribe and like this podcast, as well as comment. We love hearing your comments on the show, and tell us who you want to see on the show next. If you're local and you want to see a certain business on the show, hit us up. We'd love to have them on. Thank you.